Good afternoon. This is Tim Wegman with BIS Commodities, taking a look at the first full week of the new year, the week of the 11th of January. In review, let's just start out and see where we were for the week. Taking a look at March corn, down about 5 cents on the week, 4 3/4 to be exact, at 378 1/4. March beans down just under 12 cents at 9.10 1/4. March wheat was the winner, up 2.5 cents at 5.19 1/2. Over in the livestock market, fed cattle up just a hair over $3 at 124.97. Last hogs, fed hogs up 70 cents on the week at 62.50. Taking a look at some of the outsides here, the dollar index was down actually for I believe the fifth week in a row, down 40 points for the week, going to settle at 95.30. Crude, strong rebound this week. Looks like it's going to be up around $3.80 at the time of this broadcast, trading somewhere around the $51.80 range. And looks like stock market's going to close pretty strong on the week too, up about 550 points. Somewhere just shy of the 24,000 mark, 23.9 last in the Dow. Taking a look at the corn and soybean markets, information this week, well, I guess you could say it was lacking, was probably the big thing. Moving forward, this is the week that we were supposed to see our monthly supply and demand report, where we took a look at final production estimates and plugged that into our balance sheets. Obviously, with the government shutdown, we did not get those reports, and we haven't seen any weekly sales reports now for 3 weeks as well, due to the shutdown. So as far as information is concerned, it's been a little bit of a light info week. The one thing we did get, though, this week was CONAB's estimates on Brazil's production. CONAB is Brazil's version of the USDA, and they did lower their soybean production down there from 121.1 million metric tons down to 118.8. So we are seeing some drawbacks anyway on production ideas, and that has been the direction we've been seeing a lot of analysts go. And we did see some weakness this week, obviously, in corn and beans. We were down 18 cents the other day in soybeans, and that might have been a little bit of buy the rumor, sell the fact, tied in with CONAB's production estimate, because we've seen that break yesterday on Thursday. So we've been probably buying the rumor and then selling the fact once we have it. The other thing certainly is the ongoing Chinese-U.S. talks. We had delegates from both nations talking. From all accounts, everything coming out of that meeting and/or meetings, reports were good, but nothing of substance that was given to the public. Anyway, there are more meetings scheduled to meet the end of the month. Without the lack of fresh bullish news, I think what we've seen was just chasing some of the short-term longs that have been jumping in here due to the concerns of Brazilian production concerns and the excitement that maybe something was going to get struck here with China. Without any new confirmation here at the end of the week, I think what we've seen was just chase some of those weak longs out of the market. You take a look at the charts from a longer term, corn is still trading really within a fairly tight sideways range, and in fact you can pull a 10-cent range out of most of the corn charts, and going back the last 2 months we have probably traded in that range 80-85% of the time. Soybeans obviously a little bit wider range, a little bit more volatility, but it's still a range bound trade in here. So what do we look forward to next week? Well, I think the number one thing is the ongoing saga of the government, see if we can get anything figured out there, or they can get anything figured out there, so we can get some reports back in front of us, get an idea on how, as far as export sales are going. We are keeping an eye on basis. If there is some selling going on, maybe we'd see it in the CIF market and or the Pacific Northwest. We haven't seen any basis spikes, suggesting that maybe there is some cash business going on that may have weighed on the markets the end of the week as well, but that's something to continue to keep an eye on next week. And lastly, we'll continue to monitor South American weather. Obviously, it's the concerns of dryness in Brazil. They did receive some rains in the dry areas this week. Some more forecasted scattered, but there are the dry areas still do have a dry forecast in front of them. Argentina, too much water is in the cards. We are seeing that scaled back a little bit, but that's what we're going to continue to watch over the weekend and to start the week. Taking a look at over into the livestock market, the cattle futures for the week, we've seen a very strong start to the week, hard up move on big volume, and it's hard to estimate what that volume was coming in for or where the volume was coming from, but we did see some big strong moves up to start the week, and that's following a down day every day last week in the futures market. At the time of this broadcast yet, and obviously after the close here today, no cash has been reported yet. The bids have been pushed up to 122 or so, 123 bids out in Kansas. Last week we did see cash trade 122 to 123, most of it pushing that 123 average. Obviously, we're looking for the stronger finish with the Fed closing up there at the 125 area. We're looking for a stronger cash trade. That's probably going to determine it when we come in here next Monday to see if the Packer pays up in here and supports the stronger cash ideas. Now, interesting enough, you take a look at the boxes, they were actually down a couple bucks on the week. So the Packers' margins certainly are getting squeezed in here. Maybe we do see the Packer starting to shorten his kill a little bit to try and get some leverage here and back things up, yet to be determined. But Packer margins are getting weighed on, something to keep in the back of your mind. Futures charts do look positive and bullish moving forward, but they are also getting overbought. So that's going to be the big item, I believe, to start the week out. We're going to see where cash trades, and that'll give us direction for next week. And I think as producers, we got to keep an eye on the boxes. If we see the boxes continue to dwindle in here, that doesn't look forward in days and or weeks to come as far as the Packer position. Taking a look at hogs right now, the February was up on the week. Interesting enough, we did see the deferred months lower. June and July was down, so we've seen that spread come in a little bit, and that spread is at a very wide range out there as well. So we are seeing that come in. In fact, June and July closed lower today, 2-month lows we've seen in those contracts. Taking a look at the February contract, though, right now, it's still trading at a pretty large premium to the cash index, and that's where we're sitting here. And that's the same as last month, or when we had the December hogs come off as well. The futures were trading at a premium to the cash. So we're seeing the strength wanting to hold in here, but the cash hasn't been coming up per se. That being said, the cash was stronger this week, up about $4. Maybe that's in line a little bit with the futures up as well, but that, I think that'll be the key moving forward. There's plenty of time for cash to catch up to the futures position. And the question moving forward is the lingering stories of African swine flu. They continue to surface out there. There continues to be concerns of what's going on in China. You can paint a picture of it's a bullish and or bearish situation. The bullish situation is that if it is as bad as some believe it is to be, you could see a demand start flowing there from other countries, including the U.S., if we get something done on a trade deal. The bearish concern moving forward is if it scares the Chinese away a little bit from the pork demand in their country, yet to be determined. So a lot of what ifs. When you take a look at those deferred months, it's certainly an opportunity to get some hedging in place, which can make the argument we get to June or July, you could see hogs pushing $100 or back down here in the $60 range. No way to know. Get yourself some protection out there while protecting your upside is a way to take a look at it from a producer's point of view. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.